we are making the changes to our procedures. We have done a lot of training, and as a result, we anticipate being more efficient and more compliant as well.
Hello, you're watching Proactive. I'm joined by S&U Chairman Anthony Coombs. Anthony, very good to speak with you this morning. You're up with your interim results, and despite a challenging period for your Advantage business, you've announced the first of your 3 dividends for the year. So you're obviously confident that this is a temporary hiatus.
Well, you're absolutely right, Stephen. We do regard this as being temporary. Obviously, the reduction in profit has been almost entirely taken up with an increase in provisions. And in addition to that, some increase in underlying finance costs. We expect the provisions not to be required next year, and as a result, it is temporary. That's not to say that this year hasn't got its challenges. And I think that everybody is settling into the new consumer duty regime, which the FCA introduced in July last year. It's a gradual process. And we're working very closely with them in order to ensure that not only do we emerge from this more profitable, but we also emerge from it more compliant, more efficient, and stronger as a result.
So take us through the impact that these regulatory changes have had on your Advantage motor financing business, Anthony.
Well, I mean, obviously, we had a 166, as they call it, Section 166 process, and a voluntary requisition, which is a slight contradiction in terms that they say you're voluntarily going to agree something that we require you to do. But nevertheless, we've done that. It's had an effect in 2 ways, really. First of all, in terms of how we're able to collect our customers and how we deal with them. We've always prided ourselves through our 25-year history of having excellent customer outcomes, and that has been evidenced by the fact that our Trustpilot ratings are about 4.8 out of 5. And when we go to the Financial Ombudsman Service, we're one of the highest achievers in the industry in terms of only losing about 15% of cases that are brought. So we do have a very good customer record. That, unfortunately, was obviated, if you like, when the FCA looked at only 10 files out of 65,000, first of all. And then a skilled person indicated certain parts of our business that we needed to improve. And we've done that. But in the meantime, we had to make changes, which obviously, for instance, included changes in our position on repossessions, changes on how we collected customers who fallen into arrears, changes on affordability to a certain extent, although that's less of a problem than the collections problem. Now that's all disappearing, and it is due to disappear. We are hoping to hear in the next 2 or 3 days from the FCA that the VREC has been lifted, but obviously you can't take anything for granted. But we do think that things will come a little bit more calm, and as a result, we can get back to giving the normal, very good service we give to our customers. That's all we want to do. Irrespective of what the regulatory regime is concerned, we've always felt that we do give a very good service to our customers, that we treat them as friends, we treat them as we'd like to be treated, in a really overtly Christian way. And frankly, it's always been a bit disappointing to hear that we may not be so regarded by the FCA. Well, I think that's going to change, and we'll be back to normal in the future.
The other side of your business, though, Aspen has been doing very well, Anthony. So the loan book up 43%, 149.3 million. Profit before tax up 42%. So a very strong showing there.
Yes, you're absolutely right, Stephen. It's in the non-regulated sector, and one could say that there is a connection. In other words, that the free market is allowed to operate more there than it is in the regulated financial services sector through motor finance. I'm not going to make any comment on that, but the fact is that we go from strength to strength. We've got an increasing pool of borrowers, particularly amongst small developers who really have not been able to obtain finance from the banks over the last few years, and we anticipate that is a very big growth market. You saw, I think, only yesterday, the house prices in the UK are at or near a record high, and that indicates there's tremendous demand for products which are properly priced and which are properly constructed. And we do a lot of business with small developers. We do a lot of business with investors, buy-to-let investors, both small and large, and we expect those avenues of business to continue.
Anthony, how's the second half of your financial year looking so far?
Well, I mean, I'm not going to make any promises, Stephen. I mean, we're still not out of the VREC with the FCA. That's the biggest part of our business. I mean, the bridging finance business aspect is going very well, but we're still not out of the VREC. So obviously, the effect on our collections and also to a lesser extent on our sales is still being felt. Once that VREC is out and we can operate in a more flexible way, and I don't mean non-compliant way, I mean compliant but with flexibility, then we expect things to significantly improve. I mean, obviously, we had to do during the half year a huge amount of retraining of our staff, who have had to process, have had to document things that they've taken for granted as just being assumed in the past. But that doesn't make them non-compliant in a substantive sense. We are making the changes to our procedures. We have done a lot of training, and as a result, we anticipate being more efficient and more compliant as well.
Well, Anthony, I hope you'll keep us updated with any progress you make. Thank you very much for speaking with us today.
Thank you, Steve.
That's SNU Chairman Anthony Coombs.